Hello everyone, my name is Nitin Nahar. I welcome you all on behalf of JK classes to these inter-CA revision videos. I secured rank 6 in my CA final exams and I am a LLB graduate. In this video, we are going to discuss the following points. The first point which we are going to focus on is constitutional provisions based on which GST was introduced. Thereafter, we would be moving towards the type of tax, C plus S, C plus UT, IGST. Then we would be moving to the registration limits. Then we would be focusing on working of input tax credit. How does input tax credit work? Then we will focus on taxability of various goods and services. Then we move on to charging section, which is the main provision of the law. That is section 9 of CGST Act 2017 and section 5 of IGST Act 2017. And finally, we will conclude with the scope of supply. In this, we will be covering section 7 of CGST Act and section 8, which deals with composite and mixed supply. This is the coverage which we would be focusing on. Now, let's begin with the first provision, constitutional provisions. See, there is already a list which is available in the Constitution with Article 246, that is given in the 7th schedule, which divided the powers and had 3 baskets: union list, state list, concurrent list. However, this was not sufficient for the introduction of GST. So the Constitution was amended to bring in Article 246A. Now, what does this Article 246A deal with? It says that central government and state government would have concurrent powers to levy GST on any intra-state supply. There is an intra-state supply. This is a supply within the state where the supplier's location and the place of supply, that is consumption, is in the same state. Then we would charge CGST plus SGST. So Article 246A gives the power where central government and state government would levy GST on intra-state supply. Then the question arises as to what would be the tax when the supply is between two states, where the supplier is in one state while the consumption is in the other state. We call it as interstate supply. Now, in case of interstate supply, there is Article 269A, which says central government would have the power to levy GST in case of interstate supply. But remember one thing, it's not a case where central government would enjoy the entire amount of tax. Half of that would be shared to the state where the goods or services are consumed. So why do you say consumed? Because indirect taxes are basically consumption based taxes. So this is about inter and intra. Now the question is, when central government and state government are coming together, where would they decide about GST law? For that, a constitutional body was made under Article 279A, and its name is GST Council. Now, GST Council, you have central government representatives and state government representatives. Now, the question arises, who is the representative on behalf of central government? The law provides that there would be Union Finance Minister and Minister of State for Revenue. So these two represent central government in the GST Council. while state government are represented by their finance ministers. Now the question arises as to how many finance ministers of state are there in the GST Council. Let me tell you, there are totally 31 state finance ministers in GST Council. But sir, does India have 31 states? Now remember, for the purpose of GST, 3 union territories would be regarded as states. Delhi, Jammu and Kashmir, Puducherry. These 3 will be regarded as states for the purpose of GST. Never applied anywhere else. It is only for the purpose of GST. Because these 3 are union territories with legislature. With legislature meaning there would be elections happening in these 3 states. There would be an elected chief minister. There would be a finance minister in these union territories. So how do we get 31? 28 states plus 3 union territories, which is Delhi, Jammu and Kashmir and Pondicherry. The next question which arises is, what is the voting power of central government and state government in GST Council? Why is it important? It is very important just to check whether all the 31 finance ministers can come together and pass a decision. The answer would be no. Because the intention of bringing this Article 246A, 269A and 279A was that central government and state government come together and make decisions on the GST law. And that's why the required majority and power also signify this. Let me tell you what is the voting power. The voting power of central government is 1/3, while state governments enjoy 2/3 overall. If I were to just do a simple math, 2/3 is 66.67%. That means each finance minister, that is divided by 31, approximately has 2.15% as voting power. This is the voting power which is available to central government and state government. And what is it when you have to pass a decision? What is the required majority? The required majority to pass a decision in GST Council is 75%. It is clearly visible that when we say 75%, it is impossible for all the state governments to come together and pass a decision. Why? Because the majority required is 75, while the share which they have is 66.67%. Clear with this? And finally, coming to the required quorum for a meeting to be valid, like if these number of members are present, then it would be a valid meeting. The percentage given in the law is 50%. Obviously, 50% of the number of members. Total members are 31 plus 2, totally 33. 50% of the members are present. In that case, the meeting would be said to be a valid meeting of GST Council. And then obviously, voting would be required only if there is a dispute. But can state government come together and pass a decision? The answer is no. That is not envisaged in the law. It's not given in the law. Okay. Now, coming to another very important aspect, type of tax. What are the types of taxes which can be charged on a transaction in India? There can be 3 types of taxes which can be charged. The first combination is CGST plus SGST. The second combination is CGST plus UTGST. The third one is IGST. There are only these 3 combination of taxes which can be charged. Now let's discuss each of them. When is CGST plus SGST charged? When there is a intra-state supply, that is a transaction within the state, and within those 31 states. How did we get 31? We just discussed that for the purpose of GST, there would be 31 states. So if the transaction is within a state, then we will charge CGST plus HGST. Two things: location of supplier and place of supply. Where is this consumed? Based on these two things, we decide whether it is C plus S, C plus UT or IGST. For instance, if the location of supplier is in Bangalore, consumption is also in Bangalore, then it would be a case of CGST plus SGST. Clear? Don't forget, if both of these are in Delhi, then also C plus S, because Delhi for the purpose of GST would be regarded as a state. Okay. Then we talk about C plus UT. C plus UT is charged when the transaction is within 5 union territories. Now, which are these 5 union territories? Because only if the transaction is within these 5 union territories, then C plus UT. Not between these 5 union territories, within these 5 union territories. Now, these 5 union territories are Andaman and Nicobar, Lakshadweep, then you have Ladakh, fourth one Chandigarh, and finally we end with Daman and Diu and Dadra and Nagar Haveli. Now this is entirely one union territory. Earlier these two were regarded as two separate union territories. Daman and Diu was separate, Dadra and Nagar Haveli was separate. But at present, Daman and Diu and Dadra and Nagar Haveli are treated as one union territory. Which means that if there is a transaction between Daman and Diu and Dadra and Nagar Haveli, which is at present a single union territory, then what would be charged is C plus UT. If the transaction is within Andaman and Nicobar, C plus UT. But sir, what if the transaction is between Andaman and Nicobar and the place of supply is in Lakshadweep? In such cases, IGST will be applicable. So, whenever it's an interstate supply, that is, the location of supplier and place of supply is in two different states, two different union territories, or one state / one union territory, then we will charge IGST. Understood? Yes. So if I were to just draw some examples, Jammu and Kashmir to Ladakh, IGST would be applicable. Within Jammu and Kashmir, C plus S. Within Ladakh, C plus UT. Within Daman and Diu, C plus UT. Daman and Diu to Jammu and Kashmir, IGST. Mumbai to Bangalore, IGST. Bangalore to Chennai, IGST. Chennai to Hyderabad, IGST. Clear with this? We have discussed two aspects till now. One was the constitutional provisions, where we covered 246A, 269A, 279A. And we understood that three union territories will always be regarded as a state: Delhi, Jammu and Kashmir, Puducherry. Then we discussed about type of tax. This was the discussion on type of tax. Three combinations which can be levied under GST: C plus S, C plus UT, IGST. Now let's take the discussion forward and discuss the registration limits under GST. Let's have a look at it. Now, when we talk about registration limits, see, this will be again discussed in registration video, but let's have a look at the registration limit so that it helps us at a later stage. The law has divided this into two parts. If you are only engaged in supply of goods, then there is one registration limit. If you are supplying only services or a combination of goods or services, then there is the second registration limit. And never forget, for the purpose of registration, whenever you are checking this, you check this in a financial year. Now, not preceding financial year, in a financial year. Okay. If it is only service or goods plus service, then the registration limit is 20 lakh for all states, but for 4 states, it would be 10 lakh. Now, these 4 states have kept the registration limit lower. Government would feel that if the registration limit is kept higher, then the tax collection of these states will come down drastically. And that's why for these 4 states, it is kept as 10 lakh. Now, which are these 4 states where the registration limit is only 10 lakh? Manipur, Tripura, Nagaland, and lastly Mizoram. And what about 20 lakh? 20 lakh is applicable for all states and union territories. So, all other states and union territories, the registration limit would be 20 lakh. So, if I am providing services in Bangalore, my registration limit would be 20 lakh. So, the moment I cross 20 lakh, I would be liable to register under GST. Talking about supply only goods. If I only supply goods, in that case, 3 limits are there. One is 40 lakh, one is 20 lakh, and last one is 10. So, government has given a benefit. If a person is only supplying goods, then he can enjoy a higher registration limit of 40 lakh. But not every state agreed to this 40 lakh thing. So, let's see what are the states which are covered in 20 and 10. 10 lakh is applicable for same Manipur, Tripura, Nagaland, Mizoram. The same as for services or goods plus services. 20 lakh is for 6 states. Now, which are these 6 states? Meghalaya, Arunachal Pradesh, Sikkim, Telangana, Uttarakhand, and finally Puducherry. These are the 6 states where the registration limit for goods only even today is 20 lakh. For all other states and union territories, the registration limit would be 40 lakh. Okay. Just for remembering, if we were to talk about goods only 20 lakh, it's must UP. M-A-S-T-U-P. Manipur is covered under 10 lakh. Meghalaya is covered under 20 lakh. Be very careful about this particular distinction. If you are recalling any short form, then careful about the risk associated with that. Manipur, Tripura, Nagaland, Mizoram are covered in 10. But in 20, you have must UP. Meghalaya, Arunachal Pradesh. Careful, Assam is not there. Sikkim, Telangana, not Tripura. Telangana. Tripura is already there in 10. Uttarakhand. And lastly, we have Puducherry. Clear? Okay. Now sir, what would happen if some branches are there in 10 lakh limit state, some branches are there in 40 lakh limit state? This we would come across in registration chapter, where we would be discussing in detail about what would happen in certain cases, because there are also some cases where registration is required irrespective of the registration limit. So we'll be discussing all that at that stage. At present, we have just created a brief of registration limit which has to be checked in a financial year. This will help us in other chapters. Okay. So 3 points. First, constitutional provisions. Second, type of tax. And the third one was registration limit. Now we would be moving towards working of input tax credit. Careful. Have a look at it carefully. Something very important. Now, whenever we talk about GST, the main benefit of GST is that tax paid on purchase can be adjusted against tax collected on sale. Let's take a small example. Say suppose Mr. A has made a purchase. He has paid GST of 18 rupees here. Then he makes a sale. Now the question which arises is, this tax which he has paid on purchase, can he adjust it against the tax which he is going to collect on sale? The answer is yes, government permits this. Sir, if this was not permitted, what would have happened? If this was not permitted, then that GST of 18 rupees on purchase would have become a cost to Mr. A, which would have increased his cost. And if his cost would have increased, he would have charged more on sale price, and there would have been a tax on tax, which is also called as cascading effect. So that's why, what does government do? Government says, the tax which you have paid on purchase, you can adjust it against tax collected on sale. Now, there is a utilization methodology given, but let's beware of the words. Tax paid on purchase, which can be adjusted against output tax, would be called as input tax credit, while the tax which we collect on sale would be called as output tax. Now, is there a methodology or an order for utilizing tax paid on purchase with tax collected on sale? The answer is yes. Now, what is the methodology given? See, first of all, I am just having two parts, purchase, sale. If I have paid IGST on my purchase, can I call it as ITC of I? Yes, because IGST paid on purchase is nothing but ITC of I. Now, ITC of I will be first adjusted against output IGST. This is the first thing. Then, IGST can be adjusted against C or against S/UT. And here the law mentions any order, any proportion. Any order, any proportion. That means you can first utilize I with C or I with S. There is no restriction. Any order, any proportion. But remember, first you have to adjust I with I. Only then I can be adjusted against C and S. Be very careful about this particular aspect, because the law also provides that you have to utilize IGST on purchase completely before using the credits of C and S. You cannot use the credits of C and S until and unless you have utilized I completely. And what is the order of utilizing I? I paid on IGST would be first adjusted on I on sale. Then I would be used to pay CGST and SGST. Any order, any proportion. If the question is silent, I would recommend you to most of the times use 50-50 while you are using I, so that you have parity between C and S. Then the second is CGST would be first adjusted against CGST. See, the first part is input CGST, the second part is output CGST. So C will be first adjusted against C, then C can be utilized to pay any tax payable of IGST. Remember, C and S cannot be adjusted against each other. That would create differences between central and state government in case of transfer of each other's revenue. That's why the law has not permitted adjusting C with S or S with C. And finally, SGST / UTGST would be first adjusted against S / UT, and thereafter this can be adjusted against I. So this entire thing is called as order of utilization. So remember, first you derive the output tax, then you derive the input tax, then you will start calculating tax payable or excess credit. Now when you are calculating tax payable or excess credit, first utilize IGST completely before using CGST and SGST. And well, whenever you are utilizing I, first utilize I with I, then I with C or S, and only then move towards ITC of C and S. C has to be first used against C, then C with I, S with S, and then S with I. Don't forget this order of utilization, very important for any computation related question. So this was a brief on utilization or working of input tax credit. Where do we stand? First was the constitutional provisions. Second was the type of tax. Third discussion was registration limit. And then fourth discussion which we did was working of ITC. Where are we going next? Taxability of various goods and services. Let's talk about it. See, when we talk about taxability of various goods and services, remember that 6 products are outside GST. All other goods or services are leviable to GST. Now, which are these 6 products? First one, alcoholic liquor for human consumption. On this, state excise and VAT is charged completely by state governments, and that's why alcoholic liquor for human consumption is not liable to GST. Never would it be liable to GST unless the constitutional provisions are amended, because constitutional provisions clearly provide that alcoholic liquor for human consumption would not be liable to GST. Now, when we talk about alcoholic liquor for human consumption, you should be very careful about some things. If perfume contains alcohol, GST is applicable. If sanitizers contain alcohol, GST is applicable. If medicines contain alcohol, GST is applicable. Be very careful on this. Only alcoholic liquor for human consumption in that form is outside GST. Okay. Then we have a category which we would call as 5 products. Now, which are these 5 products? In these 5 products, we have petrol, high-speed diesel, natural gas, aviation turbine fuel, and finally, petroleum crude, that is crude oil. These 5 products are not liable to GST at present, but GST can apply on these 5 products from a future date as may be notified by central government on the recommendation of GST Council. So it has to come through the approval of GST Council. Only then these 5 products would be brought under GST. At present, these are outside GST. Now, remember, anything other than this is liable to GST. For instance, kerosene will be liable to GST. LPG would be liable to GST. Light diesel oil, which is used in machines, will also be liable to GST. Only these 5 products are outside GST. Careful with these 5. Don't mix it with all the oils or all the fuels which are there. Not everything is outside GST. Only these 5. Because the taxes on these 5 is very high and government did not intend to bring it under GST. So tobacco. Tobacco is liable to all kinds of taxes including compensation cess. Now what is this compensation cess? Compensation cess is collected by the central government for any loss of revenue to the state governments. Compensation would be paid using this compensation cess. Now, say suppose a state of Maharashtra suffers a loss due to introduction of GST. Their pre-GST revenue was higher compared to the revenue under GST. Who would compensate? Central government. Where will central government get the funds from? Government would get the funds from levying compensation cess. This compensation cess is applicable on certain products like tobacco, cars, aerated water, Pepsi, Coca-Cola, on all these products it is applicable. Clear with this? Okay. Now that we have discussed taxability, now we would move to the charging section, that is section 9 of CGST Act and section 5 of IGST Act. See where we stand. We have now completed taxability of goods or services. We are now moving towards charging section. See this carefully. Now, when we talk about charging section, section 9 and section 5 have 5 subsections: 9.1, 9.2, 9.3, 9.4 and 9 subsection 5. Similarly, section 5 also has these 5 subsections. Now, remember that section 9 has a maximum rate of 20%, while section 5 maximum rate is 40%. See, at present, the rate which is used is 28. But can government increase it? Yes, to the extent of 40% GST can be charged. Okay. 9.1 says GST would be applicable on all goods or services except alcoholic liquor for human consumption. The maximum rate which is there in CGST Act is 20%. And under IGST Act, it would be 40%. The rates of GST would be notified by central government on the recommendation of GST Council. Understand how powerful GST Council is. Without their recommendation, GST rates cannot be changed. Okay. 9.2 says GST on 5 products which will be applicable from a date to be notified by central government on the recommendation of GST Council. So at present on these 5 products GST is not applicable. 9.3 gives a power to government where government can notify goods or services where recipient will pay the tax. Goods or services where recipient has to pay the tax. It's nothing but reverse charge mechanism. In an RCM video, we will see all the goods or services which are there in 9. But for your syllabus, you have only services which are notified under reverse charge mechanism. Then coming to 9.4. 9.4 was a provision which deals with unregistered person making a supply to a registered person. In that case, registered person would be liable to pay tax to government. Again, it is only on notified goods or services. One sector is notified. In the RCM video, we will be covering what is notified under 9.4. And 9.5 is a provision where the law says that if there is a service supplied through eco, not by eco, be very careful. The service is supplied through an e-commerce operator and it is a notified service. In that case, eco, that is e-commerce operator, will pay GST as if he is the supplier. So, e-commerce operator is made liable to pay GST, but there are conditions. Service through e-commerce operator plus it should be a notified service. Only when both the conditions are satisfied, then in that case 9.5 will get triggered. Otherwise, 9.5 will not be applicable. So, if you see, there are 3 forms of taxation. One, forward charge, where the supplier collects the tax and pays it to government. Second, reverse charge mechanism, where the recipient is liable to pay tax to government. And the third one is e-commerce operator being made liable under subsection 5. In such cases, e-commerce operator would discharge GST as if he is the supplier. Careful, notified services. For instance, Ola Uber transactions are covered under this because there is a supplier, that is driver. Supply is made through e-commerce operator, that is Ola Uber, to the customer. And it's a service which is notified under 9.5. 3 sectors are notified under 9.5. Again, we would come upon this in RCM video. But we are very clear with the structure of charging section. 9.1 to 9.5 provide various taxations. Last point which we would be discussing is supply, and the most important, supply. We'll be covering section 7, we'll be covering section 8. See it very carefully. Now, when we talk about section 7, section 7 deals with the scope of supply. Only when a transaction is covered by the scope of supply can you call it as an inter or intra-state supply. So, it's very important to satisfy the conditions given in this section 7 for GST to trigger. So, section 7 of CGST Act, let's see what does it provide. The first provision is where 3 conditions are satisfied. There is a supply for consideration in the course or furtherance of business. Again, supply for consideration in the course or furtherance of business. If all these 3 conditions are met, it becomes a supply. See, thereafter a person could be registered, unregistered, depending on the registration limits. There could be exemptions, there could be various reliefs. But to become a supply, 3 conditions have to be satisfied. There has to be a supply for consideration in the course of business. Now, under supply, the law has given 8 examples. The law provides that supply of goods or services such as. Now, what is this such as? Such as mentions 8 type of transactions. They cover sale, transfer, barter, exchange, lease, license, rental, and finally it closes with disposal. These are the 8 examples given under supply, because supply such as, so sale, transfer, barter, exchange, lease, license, rental, disposal. Supply can be beyond this, but these are the 8 instances mentioned in the law. Consideration can be monetary, can be non-monetary, or it can also be an act or forbearance. Now, when we talk about act or forbearance, agreeing to do something is an act. Forbearance is agreeing not to do something. With this, you should also understand one important aspect, that if there is a deposit which is given, that is not for a supply, it's a security for taking that supply. Deposit is not considered as part of consideration unless it is adjusted by the supplier. But when we talk about an advance payment, yes, it is a consideration for the supply. When we talk about government subsidy, the law has clearly stated that government subsidy will not be considered as a consideration. While if there is subsidy received from any other person, then it would form part of consideration. That means GST would be applicable on such other subsidy. Understood? Okay. Now, when we talk about the term business, it is very widely defined. In fact, it covers trade, profession, wager, commerce, manufacture, betting, gambling, lottery, race club, any adventure, admission. We talk about club providing services to members, sale of assets during closure of business, purchase of assets when you commence business, holder of an office, central government or state government carrying out an activity. All these are considered as part of business definition. So the term business is very widely defined. Remember one thing, when the law ever uses business entity, don't forget business definition, that the definition of business is very, very wide. Clear? Okay. So if these 3 conditions are satisfied, then obviously GST would be applicable. But are there some exceptions? Exceptions meaning, say suppose one of them is missing, will GST still be applicable? The answer is yes. The second part of the discussion is transactions where one of them is missing, still GST would be applicable. Remember, never can there be a case where supply itself is missing. No. There could be instances where consideration is missing. There could be instances where business is missing. But never can there be a case where supply itself is missing. Okay. So the first transaction which we are going to focus on is a case where it is not in the course or furtherance of business. The only instance given in the law is import of service. Yes, this is the only instance in the entire GST law where even if in the course or furtherance of business is missing, still GST would be applicable, and that is import of service. Can there be cases where consideration is missing and still GST is applicable? That's our next discussion. Consideration missing. But tell me one thing, would business be required in such cases? The answer is yes. Obviously, there cannot be an instance where consideration and in the course of business both are missing. So when consideration is missing, still GST can apply. There are totally 4 transactions given in the law. The first instance is permanent transfer of a business asset where ITC was taken. Careful. Permanent transfer of a business asset where ITC was taken. Think about it. I purchased a business asset. Say suppose I purchased the air conditioner. I purchased this and I took the benefit of input tax credit. And now I give it free of cost to a charitable trust or to a friend. In such cases, government says, if you are so much intended to give something free, please pay me GST as well. The reason behind this is, when government has given you ITC, government expected you to use it for generating output tax. But here, you are giving it free of cost. And that's why government says, if you have permanently transferred a business asset where you had taken the benefit of input tax credit, you have to discharge GST. Reason? Otherwise, all the donations would be routed through business books where a person would purchase a particular product and thereafter take ITC and finally give it free of cost to the other person. Then B, a transaction between related person or distinct person. Now who all is covered in this related person or distinct person transactions? Now see this carefully. Say suppose I give a particular product, being my business asset, free of cost to a related person. Government says, I need GST on this transaction. Now, who is covered in the meaning of related person? See, related person can cover a person who are partners of the partnership firm, employer-employee, holding more than 25% or 25% shares in one or more companies, one controlling another, two controlling one, or one controlling two. All the 3 instances are covered. If a person is a sole agent of another person, again he is considered as a related person. And finally the law talks about family. Family would cover spouse plus children, spouse plus children, plus dependent grandparents, parents, brother, sister. Remember one thing, the law uses dependent grandparents, dependent parents, dependent brother, sister. But spouse and children are always related, whether dependent or independent. Never forget this. And then the last instance is distinct person. See, branches which are required to register separately or they are registered separately, for each registration they would be regarded as distinct persons. Again, this would be a case of supply without consideration and GST would be applicable. Then the third transaction is principal and agent transaction for goods where the billing is in the name of the agent, a recall. If agent is billing in his name, then the transaction would be covered under this particular point. Otherwise, no. If principal is directly billing, then there is no supply without consideration to the agent. And that's why GST would not apply. But if agent is billing in his own name for further supply, agent is billing to the retailers, then the transaction between principal and agent would be covered by this supply without consideration. And the last part of this is import of service if it is without consideration. See, we are talking about a case without consideration. Above that, we had seen without in the course or furtherance of business. If it is import of service, then GST would be applicable without consideration when it is in the course of business plus from a related person. Careful, if this related person word was not there for import of service, then there would be lot of transactions where unintended, just merely usage of internet can result into import of service. And that's why government has clearly provided that import of service without consideration. Import of service without consideration, it should be in the course of business plus it should be from a related person. Only then GST would be applicable. Okay. This entire supply without consideration which you see is given in Schedule 1 to Section 7. Now, what does Schedule 2 deal with? Schedule 2 deals with classification. See, fairly simple. Government has provided that certain transactions would be regarded as supply of goods, certain transactions would be regarded as supply of service. A simple thumb rule. Whenever there is a transaction which is transfer of title, see the title is getting transferred, then in that case it would be regarded as supply of goods because the ownership is getting transferred. But whenever there is a case of transfer of right to use, see, you are not giving the title, you are allowing right to use that particular product. In that case, it would be regarded as a supply of service. Clear? This is about Schedule 2. Then the last discussion in this is Schedule 3. Schedule 3 deals with negative list. These are transactions which are neither regarded as supply of goods nor regarded as supply of service. Now, what are these transactions? We'll make a small reference to this. Image, FMCM, fact. Image, FMCM, fact. Now, what is this image, FMCM, fact? Let's discuss this. See, I would cover sale of land and building, that is immovable property. See, remember one thing, if immovable property is sold once it is constructed, then GST would not be applicable. So, sale of land, sale of building, except when sold while under construction, GST would not be applicable. But if it is sold while under construction, then it is not covered by negative list. M is just for remembering, nothing comes here. A is actionable claim other than betting, gambling, lottery. G, nothing. E, employee providing a service to employer in the course of employment. Very careful. In the course of employment. It should be part of employment contract. Only in that case, it is covered by negative list. Okay. Then we have FMCM, Finance Minister, Chief Minister. F is fees taken by court or tribunal. Then you have MPMLA, member of local authority, panchayat members, all those are covered in this. C is a constitutional person. And last, M deals with members of a body established by central government or state government. So, a body established by central government, state government. And what is this PAP, sir? PAP covers funeral. I am sure you remember this. Alcoholic liquor license. And lastly, any functions performed by the panchayat. That is also covered here. So, if you see the entire ambit of negative list, image, FMCM, fact. I deals with immovable property. Then we have actionable claim other than betting, gambling, lottery. Betting, gambling, lottery is liable to GST. Employee providing services to employer. FMCM is taken by court or tribunal. MPMLA, constitutional person, member of any body established by central government or state government. And finally, you have FAP, funeral, burial, crematorium, mortuary, including transportation of deceased, all that. Second, alcoholic liquor license, fee collected by state government. And finally, functions of a interest to the panchayat under Article 243G of the Constitution. Okay. Now, once we are clear with section 7, it's very important to know section 8, which deals with composite supply and mixed supply. Now, what's the meaning of composite supply and mixed supply? Careful. Whenever we talk about composite supply, 4 conditions are required to be satisfied. See, first of all, it's a conjunction of 2 or more goods or services. See, whenever you are supplying 2 or more goods or services together, conjunction meaning together, then in that case, question is, what GST rate will you apply? For example, hotel accommodation suffers 12% GST. Breakfast suffers 5% GST. Now, if a hotel is providing accommodation plus breakfast, what rate to use? For such cases where there are 2 or more supplies bundled, government has provided the solution in section 8. So, composite supply is 2 or more, conjunction, 1 is principal supply. And last condition is, they are naturally bundled in the ordinary course of business. Naturally bundled meaning, normally in the trade, when you go out, you will find this being supplies made by various suppliers. That is the meaning of naturally bundled. If all these 4 are satisfied, then in that case, the rate of GST which will apply will be rate of GST of the principal supply. So, for instance, when I talk about hotel accommodation and breakfast, hotel accommodation is the principal supply and the rate of GST on entire bundle would be of the hotel accommodation. But say suppose it is a gift hamper containing chocolates, dry fruits and sweets. In such cases, see, it is naturally bundled. You see this in the market. But are you able to identify one principal supply out of it? The answer is no. In such cases, we use mixed supply. Now, what does mixed supply say? It starts with 2 or more goods or services supplied in conjunction. None is principal supply. That is, the law uses the word, it's not a composite supply. And last one, single price. Very important condition. Remember, it's saying single price. It is not saying single invoice. A single price. That means all 3 products, all 5 products, all 8 products are sold for a single price, not in a single invoice. If it is in a single invoice, individual GST rates will be applicable. For a single price, then the rate of GST which is applicable is the highest rate. Yes, the law clearly provides that the GST rate would be highest GST rate. Clear? One last sum up of entire part. First, we spoke about constitutional provisions. 246A, 269A, 279A. We spoke about type of tax here. Then we entered into registration limits which has to be calculated based on aggregate turnover in a financial year, which will again come across in registration. Then we spoke about various products, alcoholic liquor 5 products. Then we entered into utilization of ITC. What is the method of utilizing ITC? Then we move towards charging section, that is section 9 of CGST Act and section 5 of IGST Act. And finally, we concluded with section 7, that is scope of supply, and section 8, composite and mixed supply. Yes. Okay. See you all in the next video.